Welcome back to the Dividend Diplomats YouTube channel, everyone. Lanny, Bert, you know us by now. We are the mother bleeping Dividend Diplomats. So today I'm going to talk to you about my watch list for the rest of April 2023. Get hyped, get excited. You got 3 dividend stocks coming your way today.
The best there is, the best there was, the best there ever will be, guys. Smash that subscribe button. Give us a nice thumbs up here on the Dividend Diplomats channel. Again, recording this on April 15th, Saturday. Here, talking about 3 stocks on Bert's watch list, 3 stocks he owns, and 3 stocks that have a market value over $2,000 each in his dividend stock portfolio that all provide him over $100 each in passive income.
That's right. So the name of the game is reaching financial freedom by buying undervalued dividend stocks, growing your dividend income, and most importantly, juicing up that passive income stream. That's what we've been doing for 10 plus years. This is what we've been writing about. This is what we keep talking about on this YouTube channel. That is the
Tattooed
name
on the back. Let's
of the
go.
game. Yeah, that's right. So
It's in
that's
their
why,
veins, man.
yeah, no matter the markets are good, no matter the markets are bad, we're always hunting and finding those undervalued dividend stocks. And Laney, how are we finding those stocks?
Well, we put pieces of paper in a hat, and we each have our children pull out the name. We say, "Yes, that's the one." Yes, yes,
Yes.
yes.
Yes. You beat me to it. I was just about I was getting there.
No, but we use our stock screener, 3 metrics: price to earnings less than the S&P 500, 2 dividend payout ratio less than 60%, 3 dividend growth, a history of growing dividends, preferably above the rate of inflation. Yes, that dreaded word of 2022 and 2023, inflation, baby. And then we look at the dividend yield as icing on the cake.
Yeah, we have to give inflation the Kurt Angle treatment. The you suck.
You
You
suck.
suck. You suck. All right. So let's talk number one here. Been a victim of inflation. Higher costs have caused this stock price to tumble on down. And their prices have surged, but they may have hit that breaking point where customers are moving away from their products, a deadly combination for any company in the short term. But in the long term, we're liking them. We're talking Tyson, ticker symbol TSN. I have been gobbling up that frozen chicken all day for Tyson throughout 2023, especially as the stock price continues to hang in the low 60s. Year to date, down 4.37%. But over the last 52 weeks, that's when they've really been getting hammered, down 36%. So we've been building up our position here in Tyson. And we're going to show you why when we go through the stock screener and some of the metrics in a moment, why we're still having them high on our watch list.
Yeah, wow. I mean, Tyson, my wife has actually been buying a lot of their shares, but Bert, I know you own 78 shares,
Yeah.
over $4,700 in market value, producing over $150 in dividend income. So let's take a look at these metrics, brother.
Yeah, this is not a small position in our portfolio by any stretch. So looking at that first metric, the PE ratio currently 60.82 is their stock price. Forward EPS is $4.33. The PE ratio of 14, so still an undervalued stock compared to the S&P 500, which is in the high teens and low 20s on any given week.
Yeah, and that dividend payout ratio, again, looking at the safety of the dividend, they are safe. They're in that perfect spot of 40 to 60%. Dividend is at $1.92 per year, broken over 4 quarters, obviously, between March, June, September, and December. 44% is the payout ratio for Tyson Foods, brother.
And they're growing a nice dividend streak, increased for 9 consecutive years at a 5-year dividend growth rate of 12.73%. We're expecting some slowdown in dividend growth, especially as they work through these headwinds. But when the times are great, Tyson has no problem rewarding those shareholders.
When the going get tough, the tough get going. So the dividend yield on Tyson has now swelled to 3.16%. They are down in stock price 36% in the last 52 weeks, dating back to last year's mid-April. Year to date, they're actually down almost 4.5% still.
Yeah. So Tyson, again, PE 14, payout 44%, 5-year dividend growth rate 12.73%, increase for 9 years with a yield of 3.16%. It would be great to keep growing that position. It'd be awesome to get to 100 shares in the long run of Tyson. We still got some room to go, but definitely looking to nibble and keep buying a little bit more in this poultry chicken stock.
Gotta love chicken. You know who does love chicken? The next dividend stock.
Yeah. Excellent segue because we're going to talk about Qualcomm, ticker symbol QCOM. Qualcomm's just a tech stock. I have loved this company, and I've been buying them up in 2022 and 2023. Not the highest of dividend growth stocks, but I love the business. I love their revenue. They are huge. They're $133 billion in market cap. And over this time, we've grown our position to 32.37 shares thanks to some drip. Our market value is $3,890 at the moment for Qualcomm, and it produces $104 of dividend income. And I know that was one of the short-term goals I had been tweeting about, is that I wanted to get Qualcomm over $100 per share. We finally hit that mark, but you know what, Lanny? Much like you, when you and your wife hit VYM at 100,000 and you're going to keep going, I want to keep going and keep building Qualcomm at the current prices.
Yeah, because you're not done yet. You're looking at your share saying who's next. So Qualcomm, again, looking at the dividend stock metrics, analysts are expecting $12.80 in forward EPS. Share price is $120.16. So looking at that price to earnings ratio, they're at 12.80. Actually, the forward EPS is $9.39. So a correction there.
Yeah, still very low PE ratio, lower than Tyson, very low for the tech sector too. Their annual dividend is $3.20. They just announced about a 6% dividend increase too. So this is reflective of that dividend increase, $3.20. Payout ratio is 34%, so a very low payout ratio too, below our perfect payout ratio. Plenty of room and a very, very safe dividend.
Yeah, one of the longer growers on your list here, Bert, at 12 plus years and doing it at 5.70%. How about that?
Yeah, it's interesting that that's the longest one, but yeah, they're halfway to becoming an aristocrat. So you have to start somewhere to be cut to 25.
Whoa, we're halfway there.
There. Bon Jovi is one of my favorite karaoke songs. If we're going to talk about this, we're going to bring up John Bon. We're going to finish this. So karaoke, living on a prayer, you know I'll be there for it.
Living on a dividend. Let's go.
Yeah, let's go. Yield 2.66% at the current price. They're down 13% over the last 52 weeks, and that's why they found that second spot on my watch list.
Guys, Qualcomm, 12.8 price to earnings ratio, 34% payout ratio, 6% dividend growth rate for 12 plus years. Yield is now 2.66% for this chip company.
You know who loves chicken, Lanny? Stock number 3, Huntington Bank, ticker symbol HBAN. Come on, did you really think we'd be building a watch list in this current environment without at least putting one bank on there? That'd be sacrilegious, right? That'd be can't do that.
Hey, use Bert, you talking bank stocks?
Yeah, that's exactly right. You take it easy, Lanny. You got to take it easy over there. You're trying to make me laugh too much in this video. Obviously, the banking sector has been down. The super regional banks like Key, Huntington, and others have been through quite the
super regional. That's a great name.
Yeah, the super regional, because they're still top 20 banks. They're massive, and they got caught up in this a little bit. All right. Well, Huntington, what's going on there? Down 19% year to date, down 15% over a few weeks. And currently, we've built up this position over the last month. My wife and I crossed 200 shares of Huntington. We own 202.83. Wouldn't be a video without Lanny flexing. Can't miss that. Our market value for Huntington is $2,314, and our income is $126 from Huntington. But let's see, is it time to keep buying them? I guess so.
Is this a stock to buy? Is this a stock to buy versus you own 200 shares, smallest market value on the list here. They still provide $126 in forward passive income at current price. If upon drip, you're actually adding well over 10 shares throughout the year, which is pretty wild. Let's see if we can get you to 10 shares per quarter, though, brother.
Let's do it.
But yeah, they're trading $11.41. Stock is down 19% this year, down 16% last 2 weeks. Only 16 billion by market cap, which to me cracks me up. But the share price is $11.41. Bert and analysts are looking at $1.44. PE is about 8, which is kind of around the same mark as I've been seeing in the industry.
Yep, and we'll bring in the price to book because that's the other thing you need for banks to consider. Price to book, we typically find undervalued banks between 1 and 1.1x for price to book. It's probably a little lower now since the last month, but we always stick to that 1 mark. Huntington's price to book ratio is 1.06, so they're low on the price to book spectrum too. So they pass both valuation metrics for the company.
Oh, guys, to go into that payout ratio, they pay throughout the year, 62 cents in dividends. Take that over the EPS of $1.44. You're looking at 43% on the payout ratio. But for they have a perfect payout ratio. How does growth look for Huntington? HBAN, HBAN.
They've only increased their dividend for 1 year because they paused during the pandemic, like most other banks. But they were increasing before the pandemic and they started increasing after. So they actually have a 5 year dividend growth rate of 10.29%, even after taking off that 1 year. So they've shown when they get the green light to actually go ahead and do it, they will deliver strong dividend growth too.
Well, you listen up, Jack. When you actually go into the dividend yield, then brother, they're actually at 5.43% on Huntington right now, which is well over the S&P 500. Obviously, 2 times what Qualcomm is and higher than Tyson, the biggest yield on your list. And I know last week you were buying Premier Financial over 6% yield. So now you've got Huntington here, the bigger super regional at 5.4%. Bert, I dig it.
Yeah. So what am I doing? I actually like all three of these companies. I'm going to do something pretty crazy here, Lanny. This video is coming out on Tuesday, so this has already happened. On Monday when the market opens, I'm just going to buy one share of all of them to start because that's right around $200, a little bit under. So you know what? Screw it. Why not buy them all in my individual portfolio, start growing there? But I would have no problem seeing where the week takes me. And you know what? Sprinkle any one of these at any given day during the week. All of them are great investments to keep growing, keep building those positions in my portfolio. To your point, it would be great to keep juicing up that Huntington position. And the one thing that separates them from the others, they pay the dividend in the first month of the quarter. So it helps me grow my income in a different month. That the third month has so many dividend payers, and it would help spread out and juice up cash flow in an off month.
What do you guys think of these 3 stocks? Which one is your favorite? Which one do you own? And which one are you buying right now? Let us know in the comments below.
If you haven't already, subscribe to our channel. Give this video a nice thumbs up. Lanny, what do we still need to tell these fools?
Guys, you're either with us or you're against us. That was Bert and Lanny from the DD. Over and out.